Hello, friends, and welcome to another episode where we'll be going through the NMLS Save Mortgage Loan sub question and answers. So, let's start with question number 101. What is the maximum seller concession for a conventional loan if the LTV is greater than 75%? What is LTV? LTV is loan to value. So, if the loan to value is greater than 75% up to 90%, there is a possibility of getting a seller concession of maximum up to 6%. What happens? What is the maximum seller concession if the loan to LTV, loan to value, is 75% or lower? The maximum seller concession that you can get is 9%. If it's an investment property, what are the maximum seller concessions? The maximum seller concessions for an investment property is 2%. What is the maximum seller concession on an FHA loan? The maximum seller concession, irrespective of what your percentage of LTV is, it's maximum 6%. What is the maximum seller concession on a VA loan? It's 4%. And what's the maximum seller concession on a USDA loan? It's 6%. So let's try and revise this once again. 9%, any investment property is always 2%. On an average, you can say that 6% is what you, for USDA loan, FHA loan, or a regular LTV, for a regular conventional loan, it's always 6%. So where are the changes coming in? If the LTV value for a conventional loan is greater than 75%, you will get 9%. And if it's a VA loan, is always 4%. And if it's a investment property, it's going to be 2%. Okay, now let's look at question number 107. What are the two types of appraisals for a VA loan? There are two types of appraisal. One is notice of value, and the other one is called the certificate of reasonable value. These are the two types of appraisals for a VA loan. What is lis pendens? A lis pendens is a notice filed by the lender when it initiates a foreclosure lawsuit. So whenever a lawsuit is being initiated, that's when a lis pendens notice is being filed by the lender. What are the three common disparate plans in a construction mortgage? One is V for voucher, F for fix, and W for warrants. Vouchers, fix, and warrants are the three common disparate plans in a construction mortgage. What is a deficiency judgment? A deficiency judgment allows to claim other assets from the borrower when the proceeds of the foreclosure sale are insufficient to satisfy the mortgage. So there is a foreclosure, you have reached a stage where it's a foreclosure sale. And if the proceeds of the foreclosure sales are insufficient, a deficient judgment allows to claim other assets from the borrower. So not just your mortgage or your foreclosure sale. If it's too less and if it's too insufficient, then your other assets is being allowed to claim, and that's what is called a deficient judgment. What is a 5-1 arm? A 5-1 arm means that the mortgage has a fixed rate for 5 years and adjust annually after that. So 5-1, 5 years it's fixed, and then onwards it adjusts annually ever after. Where does that annual come from? The 1 year. 1 year is the annual relates to the annual aspects of it. So what are the different 4 indices that you see in the market? The COFI, COFI, the LIBOR, the Prime, and the COSI. These are the 4 indices of the market. What is an FHA reverse mortgage called? It's called HECM, a home equity mortgage, conversion mortgage. It's not a regular reverse mortgage. If your property is under an FHA loan, and the FHA reverse mortgage is called HECM, a home equity conversion mortgage. What the SAFE Act stands for? It stands for Secured and Safe Enforcement Act for Mortgage License. Secured and Safe Enrollment Enforcement Act. You would have in the multiple choice question, you could see safe and fair enforcement. So always remember that SAFE stands for Secured and Fair Enforcement Act. Who enforces FCRA, the Fair Credit Reporting Act? It's FTC, Federal Trade Commission. The Federal Trade Commission enforces the FCRA, the Fair Credit Reporting Act. Who enforces ECOA? CFPB enforces ECOA. Who ensures TILA? CFPB. TILA and ECOA both are enforced by CFPB. Who enforces RESPA? Again, CFPB, and previously known as HUD. Who created the DNC? What is DNC? Do not call list. And who created it? The Federal Communications Commission and the Federal Trade Commission. So these two commissions created the do not call list. The Federal Communication Commission and the Federal Trade Commission. Who implemented TILA? FRB, Federal Reserve Board. Remember that TILA is ensured by CFPB but is implemented by FRB, Federal Reserve Board. Who implemented HDMA? The Federal Reserve Board. The implementations for both TILA and HDMA came from the Federal Reserve Board. Who created the red flag rules? The Federal Trade Commissions and the FACTA. These are the two acts and 8 commission that created the red flag rules. What is a QWR? What is QWR? It's a qualified written request. Qualified written request where the homeowners who are having issues with their mortgage services may take advantage of a provision of RESPA, whereby a borrower may request information relating to the service of a loan. It is called Qualified Written Request or QWR. It imposes a duty to respond to the borrower's inquiry. A qualified written request requires that the lender acknowledge the receipt of the request within 5 business days and seek to resolve or concern within 30 days with a 15-day extension if needed, if the issue is in connections or notice of error submission by the borrower. What is HCM? A high cost mortgage loan. It comes as part of Section 32. Wherever the APR is greater than APOR, that's when the high cost mortgage loan comes into picture. There is no penalty, no balloon payment, ability to repay comes into picture, ATR calculations comes into picture, and always needs a housing counselor. Those are the key features of an HCML or a high cost mortgage loan. How about a HPML? It stands for high price mortgage loan. So HCML, the cost is high, whereas in the HPML is the high price. The price of the mortgage loan is high, and it comes under Section 35, whereas HCML comes under 32. It's considered as a high price section loan if APR exceeds APOR more than 1.5% on a regular first lien loan, or if it exceeds 2.5% for a jumbo first lien loan, and 3.5% for a subordinate lien loan. HPML needs to have an escrow for first 5 years. There is no prepayment penalty unless it's in the first 2 years, and there is ATR that's been calculated. What is ATR? Ability to repay is considered as part of your HPML loan. What is another name for the GBLA Act? It's Graham-Leach-Bailey Act, or another name is Financial Services Modernization Act. Graham, Leach, Bailey, these are all the three names of senators, and the way you can understand is like SPF. Just like the way the protection is provided by SPF, the Graham, Leach, and Bailey Act provides you protection. What are the two laws under which you could get a free credit report? Under FACTA and FCRA, you can get free credit report. Under FCRA, under 5 scenarios, you can get a free report. Like if there is an adverse action, there is a public assistance, there was an error, or there has been an unemployment, or you think that you are part of a victim. These are the 5 scenarios under which you could get a free report from FCRA. FACTA annual free credit report is available, and you need to log on to www.annualcreditreport.com. So these are the 2 laws under which you could get a free credit report, and under FCRA you need to satisfy one of these scenarios to get your free credit report, and under FACTA you can get it on an annual basis. Moving on, TILA applies to credit transactions payable, and how many installments? TILA applies to any credit transaction wherever there is more than 4 installments in picture. How many pages are in the closing disclosure? The closing disclosure is 5 pages. We keep the closing disclosures for 5 years, and so it's also a document that's 5 pages long. So remember, it's an easy way to remember. You keep it for 5 years, and it's a document of 5 pages, the closing disclosure. How many pages is the LE? The answer is 3 pages. How you can remember is the LE document retention time is also 3 years. How simple is that? Now moving on to what is the penalty for violating GLBA? What is GLBA? It's the Graham, Leach, Bailey Act, or the act which provides you protection, and if you are violating them, you will get a $5,000 penalty and in jail. Okay, what is a temporary 2-1 buy down? The buy down allows purchasers to reduce the interest rate on a mortgage by 2% for the first year and 1% for the next year, and it remains the original every year after. So let's take an example. As of 2023, if you get a temporary 2-1 buy down loan and your rate of interest was 6%, if your rate of interest was 6%, then in the first year you are giving only 6 minus 2, 4%. In 2024, you will only pay 6 minus 1, which is 5%, and from 2025 onwards, it's going to be 6% thereafter. So that's basically what a temporary 2-1 buy down means. Now, what is a suit of the quiet title? A quiet title or suit to quiet title is used to remove a cloud on a title. So if there are ambiguities around or more stakeholders involved in a title, that's when you have a quiet title, or a cloud on a title is how it's called. What is a chain of title? A chain of title is a clear, unbroken chronological record of ownership of a specific piece of property. So let's say you are buying this property from A, and A bought this from B, B bought it from C, C bought it from D. If there is a clear, unbroken chronological record of ownership, then it's called a chain of title. What is functional obsolescence? Buyer's remorse or change in buyer's taste is called a functional obsolescence. What is the color of the title? The color of the title appears to have title through some evidence, but in reality there is either no title or it's defective title. This person is usually not the actual title owner. So the color of the title means they have some evidence, but in reality there is no evidence or defective title evidence. And this person is usually not the actual title holder. So now moving on. What are trust deeds? The borrower is trustor, the lender is the beneficiary, and the trust holds the legal title. Basically, financial interest in the title of a real property is handed over to the hands of disinterested third parties as security for payment of the notes. Moving on, mortgage have judicial foreclosures and requires court action to foreclosure on a property. But what about trust deeds? Trust deeds are non-judicial. Mortgages have judicial foreclosures, whereas the trust deeds are non-judicial, and they do not require court action to foreclosure on the property. What are the 5 C's of underwriting? The capacity, capital, credit, collateral, and character. Let's do it again. Capacity, capital, credit, collateral, and character. Okay, let's move on to the question number 140. What are the 6 items that make a complete application? The best way to remember is use the term aliens. A for address, L for loan amount, I for income, E for estimated value. You need the name and the social security. So you need the name of the person, his social security, the estimated value of the property, you need the income and how much is the loan amount that you're looking for, and what is the address of the property. So these are the 6 items that's absolutely needed for you to complete an application. What is table funding? The table funding is a process that allows a borrower to originate and close a loan under his or her name, and after closing, the mortgage is immediately assigned to an investor. What is direct investor funding? Direct investors occurs when the lender deals directly with the borrower without any middleman or broker. What is a builder's bailout schemes? This occurs when the builder has difficulty selling his or her inventory and resorts to using fraudulent means to upload or sell properties. What is dual tracking? Dual tracking is under RESPA Section 6. It prohibits dual tracking, which is continuing to proceed with foreclosure options while the borrower is still being considered for other workout options. So the borrower is continuing to work on other options to pay his mortgage, whereas the dual tracking is a process in which you continue to proceed with foreclosure even though you know that the borrower is working on other options. And dual tracking comes under RESPA, and it's an action that's been prohibited. What are the 3 types of taps on the arm? There is an initial aspect of it, there is a periodic aspect of it, and there is a lifetime caps. So what is an alienation clause? The alienation clause is a provision in a mortgage enabling a lender to demand full repayment if the borrower transfers the loan. So by any chance, if the borrower transfers the loan, the alienation clause gives the provision for the lender to demand full repayment. What is equitable right of redemption? Mortgage to pay the entire balance due and keep the property from being foreclosed. What is an exculpatory clause? Exculpatory clause prevents the lenders from requesting and deficiency judgment against the borrower when the proceeds of the foreclosure are insufficient to pay off the mortgage lien. Who created the SAFE Act of 2008? HERA created the SAFE Act. Who created the CFPB? The Financial Protection Bureau. CFPB was created by the Dodd-Frank Act and the Consumer Finance Protection Act. So we have covered from questions 100 to 150, and there is still more to go, and we'll be going that in the subsequent videos. I hope you like this video. If you want this document or the book to be available for your easy reference, there is a link provided in the description where you can get a digital download, and there are books available from Vapari Prints. I'll be providing that link in our description as well. Hope you loved this video. If there are any questions or concerns, feel free to provide that details on the comments so we can look into it. And all the best for your upcoming NMLS safe exam. Bye.